Sorry about that one.
Great. So following up, we are very excited to be here tonight. We're so excited. None of our hardware is working, but this is a really important discussion, and we could not do any of this without the generous support of partners and sponsors. And Nancy will take us away to tell us a little bit about them.
Yes, I'm very excited. So Nancy from Vital Communities, and Vital Communities engages the civic, economic, and environmental vitality of the Upper Valley. And as part of that, we are very excited to work on this series with partners, the local crowd Monadnock, Green Mountain Economic Development Corporation, and both Vermont and both New Hampshire and Vermont community loan funds. Also, we couldn't put this all together without a big thanks to our sponsors for this event. And they are on the screen in front of you, and they are very supportive of all of the work we do, and we could not do this important work without them. Great.
Thanks, Nancy. Well, we have a great lineup of presentations tonight, and that's the meat of what we're going to be doing. So let's jump right in. A quick look at what we're going to cover over the next 90 minutes. The main purpose of tonight's conversation is to really increase interest in local investment in our region. Introducing the concept of local investment with a quick, very cursory look at the basics. Also raising awareness of local investing options that already exist, thanks to our panelists. And finally, promoting some follow-on local investment activities and other important resources that will help you along this journey. Nancy?
Yes. So I'm very excited that we have some wonderful presenters tonight. We'll be hearing from Jen Risley from the local crowd Monadnock, and we'll also learn about the White River Investment Club with Sylvie DeSaltel and Peter Reed. And then we'll also hear from Norwich Solar and Norman Levy about a solar community impact fund that they have, and also rounded out by Will Belanger and John Hamilton from the Vermont Community Loan Fund and the New Hampshire Community Loan Fund. So glad to have everyone here. Erica, take it away.
Great, thanks. Let's start with a quick poll to see where we're all coming from on the local investment side of things.
Maud, can you launch that?
It should be available now, yeah.
Great.
Might have to stop the screen share to see the poll. Not sure.
I'm getting some responses, so I think it's available to participants.
Excellent. Can everybody?
How are the results looking as they come in, Maud? Anything you can share that you're seeing as general trends?
Yeah, so far bought from a locally owned business is definitely pulling ahead, as well as the banked at a community bank or local credit union.
Excellent.
Which makes sense. I'll close the poll in just a couple of seconds.
I will say, while we're waiting for the poll results to come in, our community banking in this area is extremely strong, and that was very evident when the federal funding was rolling out for COVID response. Our local banks here lifted a huge weight, and the local businesses have a lot to be thankful for. That was not the case around the country as we started talking to many other economic development practitioners nationally. So I'm glad to hear that that's coming out in our poll as well. Anything else?
Still same trends. I'm going to close the poll in just a couple of seconds if anyone else wants to answer.
So the buy local and plaid Thursday, plaid Friday. What's the buy local day?
Friday.
Oh, yeah.
Go, Jen, go.
Great.
Friday. Yep, the day after Thanksgiving.
Well, I think that this works. It seems like the clear majority of people have bought local, but this is great. It's good to see a lot of community involvement and a lot of opportunity for further involvement in community-based investments. So this is wonderful. Thanks, Maud. You can go ahead and close that. So I think that we're going to get a lot out of this series. Most of this introductory content that I'm going to be sharing is from an excellent presentation that was part of the Vermont Community Foundation Invest in Vermont series last week. I am not an investment professional. I work in economic development, and the presentation that Janice, Louisa, and Matt created really captured local investment basics in very clear and concise language that made a lot of sense to me. So rather than reinvent the wheel, I reached out to them and they very kindly shared their work, and I'm going to share that with you here tonight. The full series of presentations from that Invest in Vermont series will be available on the resources webpage that I mentioned earlier. This introduction is by no means comprehensive. It's really just scratching the surface. Jen and Nancy will be sharing more about some follow-on events that will provide more of a deep dive if you're interested. So when we're talking about local investment, what is local investment? What does it mean? Local investment, you can go to the next slide. Local investment can be a lot of things. Local banking, buying local, volunteering at a neighborhood organization, or donating in your community. But as is noted here, there's another very underutilized resource that we can put to work, and that's our own investment dollars. American households have $56 trillion invested in stocks, bonds, mutual funds, pension funds, and insurance funds. Nearly all of it in global companies they barely know or trust. And this came to us from Michael Schuman, who's the community economist and author who will be leading our workshop in March. Anecdotally, closer to home, I've been told that the Upper Valley region alone has $5 to $6 billion under management in global markets. So those are funds managed locally. That does not include local money that is managed elsewhere. This region is the second largest wealth management market in New England, second only to Boston. So harnessing the capacity of even a very small part of that capital in order to support local economic health and resilience would be significant. So when we're talking about local investment, what's the difference between conventional and local investment? I found this very helpful, very general. There are always exceptions, but this comparison was great. Generally, conventional investing is simpler, it's easier, there are systems in place, it's easier to assess the opportunities. Most of them are published. Invested funds are more liquid. Diversification that's built into index funds is great because it spreads the risk quite easily. And the access to the market is incentivized through the majority of retirement funds that are available to pretty much everybody who works in one way or another. Considerations on the conventional side are usually purely financial, though there are some limited opportunities for socially responsible investing through socially responsible funds. On the local investing side, it's generally more complex because it's not systematized. It's more difficult to find the opportunities. There's a lot of legwork involved. Most often these opportunities are smaller scale and your investments are not as liquid. It's also more difficult to diversify. You're in a single community operating together, so your risk is naturally concentrated. Access is also much more complex. While there are tools such as self-directed IRAs and solo 401ks, these tools are available, but they're not widely understood. And that's by a lot of people who are doing the investing as well as people working in investment. Where the balance comes is that with local investing, it's easy to pursue alternative returns on your investment, meaning that beyond just a financial bottom line, you can incorporate social or community development goals. Kind of the triple bottom line you might hear about is much easier to do with local investing. But there's an important point here to remember is that when we're talking about local investing, we're still talking about investing. We're not talking about grant making. Financial returns are a necessary part of the package. It's just that you're balancing them out with other equally important or preferred social or community development goals. So because of these inequities between conventional and local investing, many of us believe that we don't really have a choice but to invest our money in the conventional stocks and bonds of the world's biggest companies, even if we really barely understand them. So recent regulatory changes, though, are making it easier and cheaper to start putting local money into local businesses. So these are real alternatives to the traditional investment structures. It's just that few of us don't really know about them or then consider them, and hence why we're having an event like we are tonight. So why is there so much interest in local investment? Why does it matter? Well, investing locally allows us to build an economy that better serves us here at home. It supports all of the things that make living here great. This pandemic has tested us, our country, and the world. And the systems that were struggling to function prior to the pandemic have really further faltered in light of this dynamic and unstable new context. Small businesses throughout Vermont and New Hampshire have been devastated. And one readily available solution to these negative impacts on our local economy, and this is one that does not depend on a high degree of government bureaucracy, is to mobilize grassroots investment. Local investment is important because it can have an outsized impact. It's challenging for small businesses to access smaller amounts of capital needed, so they're often undercapitalized. A little capital can go a long way and have a significant impact on the overall health and stability of a small business. Local investing is realized on the basis of more complete information. You live and work in the same environment, and you understand the operational conditions more fully. This proximity also allows for increased influence. Investing money is one thing, but you may also be able to provide other professional expertise or technical assistance, or even sweat equity. And these all further influence the trajectory of one of your favorite local businesses. I'm on the list for a local business to help them paint a new facility they're moving into within a couple of weeks. So all of that kind of puts you in a good place to really influence how your community develops. And most importantly, local investing stays local. In late 2020, Vital Communities commissioned an independent business economic impact survey here in the Upper Valley. 20 local businesses participated, both sides of the river. And from their responses, we were able to determine that every dollar spent locally, approximately 60 cents recirculates in the local economy. If you were shopping at national chains represented here, they recirculate between 14 and 30 cents on the dollar. And for Amazon purchases, almost all of that money leaves this area. An estimate of $165 million in 2019 sales in the 4 counties making up the Vital Communities service area. So that's 2019. We all know what happened with Amazon in 2020. All of that money left the region. So what about you? Can you invest directly? There are 2 important terms here to consider that we hear a lot and oftentimes cause a lot of confusion. And those are accredited and non-accredited investors. They're important concepts to understand, but I'm only going to touch on them briefly. The workshop being held in March goes into much more depth on this topic. But suffice it to say that if you are accredited, you can invest in anything. And if you're unaccredited, you can still make direct investments, but you need to be a bit more circumspect and aware of regulatory barriers. The classification of accredited investor was originally part of the 1933 Securities Act and was intended to protect inexperienced investors. To qualify, an individual had to satisfy certain requirements pertaining to income, net worth, professional knowledge, certifications, and essentially, the whole classification became largely about net worth. And this translated into only wealthy people were smart enough to make investment decisions. Fortunately, in August 2020, the classification was changed significantly and is now allowing more people and entities to qualify as accredited. And all you need to know is that if you're not accredited, you are unaccredited. There's only one true qualification to being an unaccredited investor, and that's that you're 18 years or older. Where this is important to us tonight is the 2012 Jobs Act allowed non-accredited investors to participate in direct investment through something called regulation crowdfunding, or regulation CF. This is important because it opened the opportunity for new equity-based national crowdfunding sites that allowed small business to raise capital from anyone, not just from accredited investors. So here I am going to turn it over to our first presenter, Jen, who's going to tell us more about a crowdfunding model. Thanks, Jen.
Thank you. Thank you all for being here. I'm going to try to share my screen. Oh, good. All right, great. So again, I'm Jen Risley. I'm the program manager for the Local Crowd Monadnock and a community success coach for the Local Crowd. The Local Crowd, or TLC Monadnock, is a community-based crowdfunding program or a rewards-based program that empowers individuals to support the businesses and initiatives that grow wealthier and healthier communities. If you're new to this idea, crowdfunding is the practice of sourcing small contributions from a large number of people to provide funding for a particular effort. Here at TLC Monadnock, we leverage crowdfunding to build a more resilient community. We support campaigns that focus on sustainable agriculture, renewable energy, affordable housing, and alternative transportation. We guide the teams that come to us through a process of planning and executing a successful crowdfunding campaign from start to finish. And we help them turn their social equity, so the relationships they have, into financing. There we go. For us, TLC Monadnock is a way to activate our community to invest in any change they want to see through investing. When community members support a campaign, it's really not just about a transaction, a financial transaction. It's about a relationship, usually with a friend or a neighbor that they already have, and they're just building on that relationship. And I like to say the community that crowdfunds together invests in the future together. And since 2017, we've helped 27 campaigns raise over $230,000 from 2,000 supporters in just the Monadnock region. During the pandemic, we shifted. We used TLC Monadnock in our program to fuel a number of responses. We helped our local food co-op finance a refrigerated trailer to grow their curbside pickup program. We raised funds to purchase a second e-bike battery for a local coffee roaster so they can make more deliveries a little bit further from where they are based in Main Street while they were closed in the first part of the pandemic. And we helped, most importantly, we helped farmers respond to a surge in demand for local food. Our latest campaign, which is on the screen now, supports the Monadnock Restaurant Project. It's a homegrown stimulus effort to mobilize our community to give local restaurants the shot in the arm they need to get through this winter. Oops. Behind the scenes, we're working to build a stronger ecosystem of investors, entrepreneurs, and service providers. Currently, the Local Crowd Monadnock is actually hosted by the Monadnock Food Co-op and managed by a team of volunteer business advisors. Our partners include the New Hampshire Small Business Development Center, the Greater Keene Chamber of Commerce, and the Monadnock Economic Development Corporation. And you'll notice at the bottom, we have something called a Pay It Forward program, and that allows individual businesses, and most recently, we actually had a crowdfunding campaign. So individuals in our community could donate small amounts towards our Pay It Forward program. And what that does is it lets us give extra funding to support campaigns aligned with our community's top priorities. So 2 years ago, we said, here are all the things that are building blocks to our local living economy. What do you think is most important? And they overwhelmingly said affordable housing, sustainable agriculture, and equity and living wage jobs. So we're going to pour all the funding that we got from the Pay It Forward donations into these campaigns. And then we'll give extra coaching and service provider support so that we can really help these campaigns go even farther than they would just on their own or just with us. Because we do provide other technical assistance to all campaigns that launch us, but these ones will get a little bit extra love during this year. So we're the first rung at the ladder at the very bottom. But it's also, this ladder is also a community investing ladder. So this is something that all of you as individuals can climb up or maybe enter at the top. Maybe you're just going to jump right up. But crowdfunding is a great first step for both non-accredited investors and startup entrepreneurs. If you're not based in the Monadnock region, have no fear. You can connect with the local crowd Upper Valley, hosted by our great friends at Vital Communities. So I look forward to answering questions at the end, but I also look forward to hearing from other panelists representing higher rungs of the ladder. So thank you for having me today.
Thanks, Jen. That was great. I love that final slide. I had originally had a slide in about a capital continuum, which is, it's important because ladder or continuum, if you're interested in getting into local investing, it's good to know that there are opportunities all along the way. Different kinds of capital are needed at different times in a business cycle. So thank you. So now we're going to turn and hear from the White River Investment Club. So this is what can happen when you come together with like-minded people and put your wallets on the table.
Okay, can everybody hear me? So my name, I can't see myself, so I'm not sure if I'm on. Just let me know.
Yes, you are,
We can
Sylvie,
hear
go for
you.
it.
Let me know if something's not going right because I can't see. Okay, so my name is Sylvie Desatal and I live in Tunbridge, Vermont, and I own a small business. I'm a landscape gardener and have been self-employed for all of my working life. I'm also a graduate of the Vital Communities Leadership Upper Valley program back in the year 2019. So I'm going to give you a brief history of the White River Investment Club. I am a founding member, and the White River Investment Club came out of a series of forums that BALE, Building a Local Economy, is a nonprofit here in South Royalton, had put on these forums very similar to what Vital Communities is doing. They were held at Chandler Arts Center in Randolph. And one of the 10, so this was over a period of 10 months, and one of the 10 forums was about local economies and local investment. And Michael Schumann happened to come for that, and Gwen Hall-Smith also from Central Vermont presented. And at the end of that very well-attended presentation, we did some brainstorming. And one of the brainstorm items on the list was to create a local investment club. And so one of the people who were in attendance, Stephen Aldrich, just really took the bull by the horns and decided he really wanted to do this and started, you know, sort of the wheels working towards creating a club. And so by the year 2015, White River Investment Club was born as a domestic LLC, and it took us about a year to make our first investment. So we are now, so we've invested, we've been up to about 20 people, and now we're a little bit below that, but we have made up to $300,000 in investments, with our current outstanding investments at $150,000. And right now where we are is that we are in the process of reorganizing a little bit, and we will be starting like a whole new portfolio. And so any new investments will go into some, you know, future investments. And let me see. So, you know, now or soon would be a good time for people if they wanted to become members of the White River Investment Club. So, and then just to go on to our mission and our vision. So the White River Investment Club, RIC, is a group of local investors who provide financing to entrepreneurs to support a vibrant and sustainable local economy focused in Vermont's White River region. Pretty simple. And then our vision is that we really envision local communities that are caring, equitable, and environmentally sustainable, and that provide for the health needs and welfare of the region. That says it all. And we are really working to keep our investments as local as possible. We find that building the relationships with our neighbors and the people where we do business with is really what is rich, although we have investments throughout the state of Vermont from the past. So I think that's what I've been allotted to say, and Peter's going to pick up from there. Thank you.
Sure, I'm Peter Reed, and I've been a member of the investment club for a little over a year. After several arm twistings from members, I finally joined, and it's been a great experience. So just a little bit about how we operate. We have a current portfolio. We meet every month and talk through any updates from the current investments. But we really try to focus on new opportunities that come to us from our members, word of mouth, our website, and actually we sometimes get referrals from some of our customers sending their friends and family our way. The candidates are given our investment guidelines and a template of information similar to what you might present to any sort of investor or a bank. And then they come and make a formal presentation to our club. We go and visit their location, get to know the people a little bit, and at some point, depending on our liquidity, we make an investment if we feel the risk and the return are and all the side benefits of the business are worth it. Normally, our investments are in the range of $10,000 to $50,000. We structure them in a lot of different ways. We have straight up loans, but we also try to do things that are a little more flexible, like royalty arrangements. We've had some straight kind of equity in businesses, but we try to match the style of the investment to the needs of the person that's looking to build their business. And as Sylvie said, we're open to new members at any time. So it's a pretty flexible setup and a very nice group of people. It's a good social gathering as well. So what do we look for when we look at investments? We have a criteria that, as was described, we have kind of the multiple bottom line view. We clearly are looking for an investment return. As Erica said, we're not a philanthropic organization making grants. We do look to invest and make a return, but we also focus a lot on the character of the business, the people involved, the impact on the local economy, the environmental impact potentially of a business, and try to really bring it home and make sure we're creating employment and helping to grow the economy locally. Normally, our investments are in the startup phase or a business expansion that wouldn't normally meet commercial banking guidelines. Banks like to see a fair amount of track record before they loan money to somebody. So we're really not competing with the banks. We feel that we're filling that niche, maybe a little bit higher up on that ladder that was described. It is sometimes a little bit riskier, but we do try to control our risk and make sure that we're making prudent investments because we want to keep the whole thing going. And just a quick sample of some of the businesses that we've invested in the last several years. We've done a variety of things. We were an early investor in EC Fiber. I think that was our first loan or investment that we made as that business was really trying to grow, and it's evolved now into they're going to Wall Street instead of coming to us for financing, which is great if you need internet. But I will highlight one arrangement we did with Kiss the Cow Farm. You may be familiar with them. Great group of people, and they wanted to buy a mobile processing facility for chicken slaughtering, but they only slaughter chickens a certain part of the year. So we structured the investment so that they would pay us a royalty on every chicken that was processed. So if they were doing a lot of business with chickens, then we would get a lot of payment. And during the winter when things were quiet, they didn't really have to pay us anything. So it fit very well with the cash flow of the business. And those are the kind of things that we like to do to make sure that we're not creating stress on a business unnecessarily by having a very structured kind of repayment plan. As you can see, we've done a number of agriculturally focused loans and investments, but we have done Conrad Prefab as a manufacturing facility that makes some neat prefab structures. So it's quite a variety, and we learn a lot about the different businesses in our community. So that's the White River Investment Club.
Thanks, Peter and Sylvie. I just have to do a shout out. I'm coming to you from Thetford, compliments of EC Fiber. So I'm a fan. And I'm also having Kiss the Cow sweet cream ice cream for dessert tonight. So I have that to look forward to. So thank you for your investments.
No problem.
Another one small thing on the investment club idea is that if you're looking for ways to kind of leverage your impact on a community, is coming from the Regional Development Corporation side of things. One of the things that we're looking for when we look at other project opportunities in a community is how actively the community is engaged in supporting their local businesses. And so the presence of things like investment clubs and integrated private public partnerships, like we're going to hear about here in just a moment from Norman Brendan, are really important, because it even leverages your investments more so by attracting other activity to your area. So I'm going to hand it over now to Norman Brendan.
Great. Norm is sharing his screen right now after he unmutes himself. Hey, Norm, you're muted still.
Unmute.
There we go.
And now play. All right, my amateur status is showing. My presentation is private nonprofit collaboration, a model for providing solar energy to low and moderate income populations. My name is Norman Levy. I'm a retired doc and a member of the Norwich Energy Committee. So a little bit more about myself and how I got into this. I retired from DHMC at 2013 and joined the Norwich Energy Committee in 2014. My personal interest was figuring out ways to extend the benefits of energy efficiency and clean energy to low and moderate income Vermonters, which often do not have the upfront funds needed for investing in solar panels or even in weatherization, and are also often averse to taking on additional loan debt that has a long-term benefit, but nonetheless can be very stressful to their month-to-month living. So I was very impressed by the Sun Common model of community solar, because rather than selling panels that are located in an off-site solar array, Sun Common sold the electricity that was generated from the panels that they built. There were no upfront costs, and people just paid for the electricity, typically at a 5 to 10% discount versus Green Mountain Power's retail rates. And they created a number of arrays, but ultimately stopped expanding, although they continue to offer the service to hundreds of Vermonters. And it stimulated me to find out how that model was financed. And when I did my homework, I realized that at my level of resource, that I could emulate their model, albeit on a smaller scale, and offer to low and moderate income residents of my local community of Norwich at a discounted price. But I couldn't do it by myself. So hence the concept of private nonprofit collaboration. So who are the players? The privates include myself as the investor and owner. I created an LLC called Norman Son, make it sound like a local butcher shop. And the other private party was Norwich Solar Technologies, who were builders of the array, but also provided assistance in describing the project first to me, and then to the other members of the collaboration. So that include Twin Pines Housing, formerly Twin Pines Housing Trust, which is the primary source of affordable housing in the Upper Valley. And they were the builders of a cluster of 14 homes for moderate income homeowners called Starlight. And Twin Pines was also the owner of an adjacent 1 acre piece of land, which is perfectly sited for building the array. And finally, they vetted us essentially and gave us access to the Starlake homeowners. And then the final member were the off-takers, the Starlake homeowners. So although this model had been applied, pardon me, a little sip of water, it had been applied in other parts of the country, it was new in this area. So it took a while for all the parties to feel comfortable with how this was going to work and who had what responsibilities. For the homeowners, they're always leery of agreeing to something that has a surprise downstream. And Twin Pines is lean in terms of personnel, and they are very fearful of what they call mission creep, which I'm sure all of you in the nonprofit community are aware of. But eventually, everybody signed on. So in May of 2019, we started building our array, and in June of 2019, it became live. So it's a 45 kilowatt AC, 65 kilowatt DC array, provides electricity to the 14 homeowners in Starlake, also provides it to an adjacent homeowner outside of the cluster. And we had sufficient excess production that we also provided the electricity to cover home repair, a nonprofit in White River Junction. Because my focus is more social and environmental than maximizing my return on investment for this amount, these dollars, I was willing to take a slightly longer period before I could break even. And in doing so, was able to provide the electricity at a 25% discount versus Green Mountain Power. So I'm giving the homeowners clean electricity, and I'm putting a little money back in their pocket. So a summary of the people involved: land owned by Twin Pines Housing, a nonprofit. The array was built by Norwich Solar Technologies, the developer, and was financed and owned by me, private investor. So why did a retired doc from an academic practice who had no experience in business, came from a very modest background, and was very, very risk averse, think that I could build a solar array? And the reason was, when I did my homework, I realized that very generous subsidies were inserted into the federal tax regulations in 1992 to encourage private investment in renewable energy at a time where it was not at all attractive and people really didn't know whether it was going to succeed. And so to stimulate that investment, the subsidies are generous. And they go far beyond the 30% or 26% that some of you are familiar with for installing solar panels on your rooftop, for instance. They typically return a full return of the initial investment in 5 years, and up to 60 to 70% of the initial investment at the end of the first year of operation. So knowing that, it gave me the confidence to invest far more money, frankly, than I would ever have considered investing up to this point. And further, knowing that I'm going to get this money back, and a significant portion within a couple of years, it gives me the ability to recycle these funds and just do it all over again. So this is that multiplier effect that we talked about for one person. So although I'm running it as a business, I have to meet all the federal guidelines of ownership and private ownership. Ultimately, I view it as charity on steroids. So why am I telling the story? I'm telling the story because I think there are others of similar means and similar progressive beliefs that would be very interested in emulating this kind of project if they simply knew that it existed. And the problem is, as we've alluded to, is that the investment community just doesn't know about these investments and won't tell their clients about them. And the other reason is to let you know that some solar developers have begun to actively facilitate this type of local impact investor model by serving as the matchmaker between potential investors and potential nonprofit off-takers. And they've created a number of creative ways that can be done. In my case, I built the entire array from scratch, but they also, if they are building a larger offsite array, they can allow a potential investor to purchase a part of that array. And by being an owner, they get all the tax benefits that I could tap into, and they could then sell their production to a nonprofit. So since all the savings are actually tax credits, you have to pay taxes. Nonprofits don't pay taxes, so they can't tap into all these savings. So with the partnership, the benefits go to the nonprofit. The money initially comes from me, and then finally, after I've satisfied all the requirements, after 6 years of ownership, then that array is mine. It's an asset that I can do with it what I will, and I could sell it to the nonprofit, or I could donate it to the nonprofit because it's mine. Okay, one last slide. I'm sorry I talked too long, but just to show you that there are responsibilities of ownership. So here I am at the beginning of every day winding up my solar array so that it can generate electricity for another 24 hours. All right, thank you. So now we're going to hand it off to Brendan.
Yeah, thanks, Norm. I appreciate it. Let me share my screen here. Just be a second. All right. Well, so I'm Brendan Malley here from Norwich Technologies. Can everybody see my screen?
Yep.
Great. Thank you. So we were lucky to work with Norm on his project, and it's a great one. And it's an example of a wide variety of projects that we can work on with our community impact investors. So we do all sorts of work. We do work directly for nonprofits. We do work for-profit work. We've done solar arrays for businesses in town, but we also do a lot of work. Over 50% of the off-takers of our projects were low and moderate income off-takers, both individuals and nonprofit housing agencies, as well as schools and towns that fit that description. So we're based here in White River, and we've got folks throughout the area, and we do work in Vermont and New Hampshire, and we're expanding into Maine. Norm's project is here, front and center, as it should be. Also, we've done work with Washington County Mental Health Services, Twin Pines Housing Trust, and a variety of other nonprofits, including the Haven. What we're doing specifically with our local investors is to provide an area for folks to come together. So investors are motivated and interested and often mission driven, as well as return driven. We look to connect those investors with the off-takers, either the affordable housing groups or specific nonprofits or charitable organizations, as well as find a good place to put a solar project and work with the state and local governments to make it through permitting. That's a lengthy process. Solar projects in Vermont can take, sometimes they take less than a year, but they can take multiple years to fully permit. So it is a long process, and it's one, I think the key word here is the collaborative process. So if folks are thinking of becoming involved in investing in solar, think of it like a collaborative process. If you're a creative person, you'll enjoy figuring these things out and solving problems together. As an example, often in Vermont, we have a certain type of project, a so-called 500 kilowatt solar array. And so we've got some numbers that we can use to explain it. But the numbers are significant. We can drive direct employment, indirect employment. We contribute to state and local tax bases, and we contribute through our projects to the upgrading of our local utilities. And with the events in Texas, we can see how important it is for the utilities to continue to migrate toward a more modern grid to support us through challenging times. Here's a little bit of a graphic that describes the development process. So we bring together permitting and planning, as well as the documents that explain and communicate the financial basis of the transaction. As well, we do the actual work. We provide the engineering, we buy and construct the solar array, and we maintain it over time. We work hard in our community to connect with the nonprofit and the low and moderate income community to bring them into the project, and then we reach out to connect with the investors. Those are the three parts, right? There's the physical project, the customers, or those who will take advantage of the power or the credits that the project creates, and then the investors who will bring the capital to make it all happen.
Brendan, you have about 1 more minute, okay?
Thank you. So I think, in fact, it's a good prompt. We could all go on, but I think I've explained the basics, and we've got many specific projects I'd happy to talk to people individually about.
Great, thanks. I think that probably those case studies would be perfect to put up on our resources list in terms of seeing how things have worked in different places. So thanks very much, Norm and Brendan.
Great, thank you.
So now we're going to turn to Will and John, who are coming to us from their respective state community loan funds. And I'm really happy to have them here with us tonight. It's some early conversations that we had with them that sort of confirmed for us that we were on the right track and looking at exploring this local investment idea further. And I think that the community loan funds offer a really good opportunity for people who are starting to dip their toes in what it means to invest locally. So I will ask, I think that we're coming, is Will going first, or?
Yes.
Great, thanks, Will. It's all yours.
All right, well, thank you. And thanks for everyone for joining us. My name is Will Belanger with the Vermont Community Loan Fund. And like everyone else, let me come on. Great. So like I said, Will Belanger, Vermont Community Loan Fund, and John Hamilton from the New Hampshire Community Loan Fund is going to be coming after me. We operate very similarly, so much so that we kind of split up community loan funds into and are each taking a piece. So much of the how and the why you would invest with a community loan fund, why individuals or organizations would partner with an organization like ours are similar. And so I'm going to go over kind of VCLF and the how, and then John's going to kind of take New Hampshire and the why. So first off, our mission at the Vermont Community Loan Fund is to create opportunities leading to healthy communities and financial stability for all Vermonters. And really, as a community loan fund, and then how our impact investors and our borrowers go together with VCLF in the middle, we have at VCLF 246 loans, about 32 million outstanding in lending throughout Vermont. We have about 450 investors who have about 650 investments in the fund. So of our investors, about 55% of them are individuals. The other 45% are government or institutions. So I stole this. You'll see this in John's slideshow, and I saw John's slideshow ahead of time. And so I stole this bucket from him and put my own information in it. So you'll see this again for the New Hampshire Community Loan Fund. But this is just to give you a visual on how a community loan fund works. So you'll see that we have the Vermont Community Loan Fund has total assets of about 50 million. About 33 million comes from investors, and about 17 million comes from gifts or retained earnings, but are the net assets of the fund. And then obviously where that money goes when you turn on that spigot is to affordable housing projects, childcare, small business, other nonprofits we finance. And VCLF has financed over its 30 plus year history, about 115 million has been deployed to those borrowers. You know, I'll say that this is the reason why I liked John's bucket is it captures kind of in a visual the pooled nature of a community loan fund and how investments go into this one bucket. They're not linked to a particular project, a particular affordable housing or childcare or business, but go into the bucket and get mixed with those gifts, and all that money then flows out into those projects. And that's the little bit different than what other folks have been talking about, which is a more direct right to a particular named business. This is a community loan fund is much more a pooled investment. So loan fund investors, who are they? They are impact investors that are really trying to align their assets with their values. They want either a social return, the affordable housing, helping folks build wealth, helping folks improve the quality of their lives or the health of their communities. Or they're folks that are very place-based and they want to make sure their money stays local. Whether it's in Vermont or New Hampshire. It's really folks that want the safety of a larger, diverse portfolio. Like I said, all of the funds are pooled and then lent out. So you are getting, when Erica talked a little bit about the difference between local investing and conventional investing, you are getting a little more diversity in your portfolio than a direct investment might be. We also, and I think John does this as well, we also have some focus issues if folks are interested that they can direct. If they're very interested in food and farms and forest, they can designate their funding into that bucket. It's kind of a sleeve inside that bucket. It's kind of, if I redid that visual of the bucket, there might be a couple of spigots that come out. But folks have the ability to kind of lean in towards a particular use. Not a particular project, but a particular use. So investing with community loan funds. So first off, it isn't an unsecured loan. We use a promissory note and a loan agreement between us and the investor. It is I would say most of our investors are unaccredited. So you do not need to be an accredited or unaccredited. We don't need to worry about that. You can be unaccredited and you can lend money into this pool, into community loan funds. Typically, the minimum, and I think John's is the same, our minimum investment is typically $1,000. There is no maximum. We have some very large investors that have placed larger amounts. Its financial return is fixed, and it's usually, I think ours ranges from 1% to 3%. fixed return depending on how long you leave that investment with us before it matures, and we can repay that investment to you. Typically, our terms are anywhere from 1 to 10 plus years. We would take longer, I'm sure John would as well, but our typical investments are between 1 and 10 years. And I think of it in many ways like a fixed income security, like a bond that you might buy, where it's a safe investment insofar as that the investments are protected by the underwriting and servicing of the portfolio. It's a secured portfolio. We secure our loans with collateral. And then that equity, that part of the bucket that was on the bottom of the bucket, the equity which would cover any initial losses of the fund. Over the 30 plus years, I think we started up in 1987. We've 100% of our investors have been repaid. They've always been repaid their return and their capital back when needed. So our most kind of popular vehicle, it looks like a certificate of deposit. If you think about it, you get an interest rate, you get it for a particular amount of time, and when that term is up, you get repaid your principal. We do some more flexible kind of money market looking accounts and some automatic deposit accounts, basically a way for someone to automatically on a monthly or periodically basis add money into the account, which can then have that investment start at a lower amount. And our investors are broad. Like I said, individuals and families, accredited and non-accredited, make up about 55% of our investors. Faith-based groups, national community banks, corporations, foundations. So I asked one of my lenders to give me a picture of a goat because I like goats. And this is what they gave me. It's an investment that we've done, just a bit of an example, but it's because I really like the smiling goat. And that's really the how. And I'm going to turn it over to John for the why. Whoop.
Great. Well, thank you, Will. I appreciate that. And it's I'm so energized by this conversation to have so many different people committed and partners committed to putting their money to work locally with those values. So as Will shared, I'm going to focus a little bit about the New Hampshire Community Loan Fund and also more broadly about why enlist a community loan fund as part of the way that you might put some of your money to work locally. Think of us as a bridge. We connect, we rally resources from the community and then ferry those resources across the bridge to meet borrowers where they are and fill capital gaps. That's the essence of what we do. We're a conduit to connect the two, sort of neighbors helping neighbors in a very local way. And so I want to speak to sort of the value of being an intermediary or that connector. So I think the major high-level point I want to leave you with in terms of the why is that money alone is often unable to fill the capital gaps that exist that prevent us from building that local regenerative economy that we all aspire to. Sometimes it needs more than just money. Relationships, customized technical assistance is actually what we would consider to be our secret sauce. And let me share a couple of examples of why, because sometimes money alone has some unintended consequences on businesses. So a farm that we worked with came to us saying, someone at the farmer's market just loves our pork and they want to help us go to scale on the pork. That's awesome, but we need a loan to do that. And so we engaged with them and through a series of meetings discovered that when we looked at their financials, they didn't differentiate between the vegetables and the cheese and the pork. And so they really couldn't answer whether they were in fact earning money or losing money on the pork. So what we did is we connected them with a third party that could help them dig in and do what we call an enterprise-wide financial analysis. And we provided a grant to pay for that expertise. The good news is what we discovered is that they were losing money on the pork and therefore didn't proceed with that loan. Again, that's an example of where the business came to us, but there are unintended consequences unless we dig deep and understand truly what the business most needs. A second reason where money alone may not fill the capital gap is that money may not be needed. There was a local dive shop near a lake that ran out of cash and came to us looking for a loan. And what we discovered after we dug in and built the relationship and learned more, they have some trips that they organize, dive trips. And there's a long waiting list. And they ended up increasing their price of those trips. And as a result, they no longer needed a loan. And then thirdly, sometimes money can come from a mainstream bank if some of the underlying issues are addressed as a business. There was a husband and wife run restaurant that we were working with, really talented, but a little bit scattered and not grounded and structured in their activities as much as they could be. And so we connected them with a technical assistance provider who gave them that structure to look at the per plate take, who helped them redesign their menu, who helped them to train their wait support group to upsell to their customers. Guess what? They became profitable. Guess what? They became bankable. And in the end, they were able to revitalize their restaurant without any more than just traditional bank debt. So those are just some examples of where enlisting a third party like a community loan fund helps to make sure that we're strategic and practical in how we're helping these businesses. These businesses that we love and want to support are sometimes so in love with the product or the service that they provide that they don't always have the benefit of a board of directors or a third party to sort of help them refine their plans. And that's a lot of what we do, because what we've discovered is when the business itself is successful, we get repaid. And so a lot of our focus, therefore, is let's just focus on helping support and set them up for success. And we know that when that's done, and if they still need a loan, we know that we can then make sure we'll get repaid. So the other aspect of, so let me actually go on. I'm going to share a little bit the analogous slide that Will shared. We're a little bit larger in part. I think it's because, you know, community loan funds, we reflect the community that we work in. And New Hampshire, you know, live free or die is just part of our reality. So there are fewer sort of nonprofits doing this work. So we do a larger array of lending and therefore have a little bit larger bucket. And we've been around since 1983 and are really pleased that our borrowers work so hard to repay. 98% of them have repaid, which is astounding to realize that all of them are non-bankable. And like Will offered, the community loan fund investors, 100% have been repaid since 1983. And that when we started. And while past performance, of course, is no dictated future, we're really proud of how hard our borrowers work to make sure we get repaid and that we have a perfect track record to make sure that investors feel comfortable continuing to invest. I also, a lot of credit goes out to individuals. 75% of our investors are individuals. About $30 million come from individuals. So that's a big piece of how we get our work done. In New Hampshire, the live free or die state again, about 1.5 million comes from government. And the rest of our $173 million comes from other private sources, churches, foundations. The banks have been terrifically supportive. Ledyard, Mascoma Bank, and recently Dartmouth Hitchcock made a significant investment, which we really appreciate. And Vital Communities has been a longtime investor. So it's, again, pooling the community's resources to help fill capital gaps is what we do. So just to give a little bit more of a Upper Valley taste of what we do. We've raised about 3.6 million from 34 investors in the Upper Valley area. And over the last 5 years, we've deployed about 6.5 million in housing and local businesses. So about double the amount that we've raised locally, we've deployed. And so we'd love to invite more investors as well. We'd love to double that 6.5 number by enlisting each of you in referrals. Sometimes we don't know about opportunities. And so I just love learning about Rick and other investment opportunities that are out there, because as if all of us as partners who are providing capital can communicate amongst each other, more deals get done that way. So I look forward to doing that. So I want to just give you a deeper taste of some of the work that we've done in your region already, and sort of use this chart, which is a risk and reward chart. So the lower is the amount of risk. So the lowest risk is debt, and the vertical axis, the vertical axis is the reward. So the highest reward is equity. So high risk, high reward, and then the bank debt would be low risk, low reward. So in some sense, it just reflects that in terms of finance, risk and reward always need to be in balance. And banks play a different role than equity providers, but they're all sort of the same principle. Risk and reward need to go in balance. We, as the Community Loan Fund in New Hampshire, use all these tools. And it's a little bit unique that we have that kind of breadth. What that does is it enables us to sort of have conversations with potential borrowers and really not focus on, just one of those tools, but to know the benefits and trade-offs of each of those deal structures and just listen and then try to do the correct deal structure to make sure it's a win-win relationship with our borrowers. So just to give you some examples, in terms of debt, New England Healing Sports at Mount Sunapee, we made a loan to help them add a lodge. We're about to close in Claremont on the Sullivan House for sober living. Our Welcome Home Loan program has provided about 30 mortgages for workforce housing in the Upper Valley area. And this is mortgages that go beyond the Fannie Mae, Freddie Mac criteria to promote low wealth home ownership. Another piece of debt that we do, and just picking up on the solar theme that we've had earlier this evening, is Revision Energy is a partner that we have invested in through debt to help them. So when they did the WS Badger solar array recently, it was our debt capital. As was described earlier, as you do the solar, it's a combination of for-profit investors who can take advantage of the investor tax credit, and then debt. And we have become Revision Energy's debt partner on the debt side for their nonprofit and municipal projects in New Hampshire. And I love the fact that we can help direct capital to them to promote that kind of work. In addition, we provide a lot of debt to housing cooperatives. We work with, there are 13 in the Upper Valley that preserve affordable housing for people who live in manufactured housing parks. We help them to become the owners of the land underneath their homes, and we have financed about 13 of them. And this is a great source and supply of workforce housing and empowers the residents to own and provide that kind of security. And just to build off of what Norm was saying, I love learning what Norm shared. And we too share the same understanding that high cost of energy hurts the low-income people the most. And so we're able to team up and provide solar array for the 50 households who live in the Mascoma Valley housing cooperative. And it reduced their lot rent by 5% or $22 a month, which was outstanding. In terms of sub-debt, an example. So sub-debt is the same as debt, except it just goes beyond higher risk. So if, God forbid, there was a disaster and the business or the organization wasn't able to pay back the debt providers, the subordinate debt provider doesn't get anything until the primary debt holder gets repaid. That's the definition of sub-debt. An example of that is Lou's Diner right in Hanover. Some of the rocks, the resident-owned cooperatives that I spoke of, sometimes they're debt on our own directly, and sometimes they're behind a bank in subordinate debt position. In addition, the Haven and Twin Pines and us collaborated with putting a Parkhurst project together, which helps people move from Dartmouth Hitchcock's detox program to shelter to then graduate into a 1-bedroom unit. So we participate in that. So that gives you a little bit of a picture of the kind of the debt deals or loans that we make in the area. Now I want to shift to the royalty and equity, and that's shifting to investments, which is different than debt. In terms of royalty, we haven't really done anything in the Upper Valley. We would love more referrals, but just as an example, Encore Redevelopment, which is another solar generator based in Burlington that they needed capital to expand. We provided a royalty investment to make that happen. And then in terms of equity, again, we've not done an equity investment in Upper Valley. Again, we would love to engage, and perhaps through a better relation with Rick and others, we might learn more about other opportunities. And as an example of that, in Keene, we invested in Mama Says, which is a business that was looking to grow home-delivered, prepared vegan meals, which has done really well, as you can imagine, in this current environment. So I hope that that gives you a little bit better taste of some of the work that we do. And just to really say, I'm just delighted to have this conversation and learn more, have you learn more about who we are and what we're doing. And we'd like, through the benefit of your referrals and conversation, that we go deeper into the Upper Valley and just feel really excited about the partnership with Vital Communities as helping us to become more visible and to think about ways that we might work together to expand the ways that we might deliver more capital. And just to acknowledge that Ken Kuhnhart is a part of our team and is not on the call. Sorry.
Nice ringtone.
Yeah, great ringtone,
I
John.
wanted to remind myself not to go over time. So I'm going to end there by just saying Ken Kuhnhart is our Director of Investor Relations, and you will find him on the website communityloanfund.org if you go to our investment side. Anyhow, delight to meet you all through this, and I look forward to sharing more.
Thanks, John and Will. That was great. I know we have more questions, but the most recent one that came in is specifically for the community loan funds, and it's regarding management fees, and if that's even a relevant concept. So could you answer for New Hampshire and Vermont on that topic?
So there's no management fee that we charge. So we do the same structure as Vermont, that it's based on a fixed income. There's no management fee. And one of the differences is that these are evergreen funds, meaning the money just recycles. It's the same one shared risk pool we've had since 1983. We don't stop it and then start a new one and then deploy that and stop it and start. It's just the same shared risk pool. Every time a borrower repays, it goes into the top of the bucket and gets recycled.
Yeah, same here for Vermont.
Great, thank you. So we have a few more minutes now to turn to taking some questions. Maud has been compiling questions on the side, so I'm going to turn to her and see if there are any topics that are rising to the surface, or if you see any trends that we want to note, Maud.
Sure. There's definitely a couple different questions, but the most were directed towards the White River Investment Club. And so for Peter and Sylvie, I'll just ask a couple of those quickly. So the first one was asking how the group typically manages positive returns, and do they go back to the White River Investment Club for reinvestment or to the members directly?
So we've historically sort of recycled our returns back into the fund. And I mean, we're obviously not as big as the community loan fund, so it's a little choppier. But we have found that more recently, as our portfolios become a little more mature, and some of the things we have on the portfolio are loans that extend out a number of years, that we haven't been able to kind of recycle things as fast as we would have liked. And so that's why we're considering setting up a sort of an additional pool to sort of kickstart a new round of investing.
Another one, Maud, or?
Yeah, and then this one is from Katie Gardella. She was wondering whether the investment club would consider working with a nonprofit. Yeah.
I think we would. We're open to a lot of different things. So we haven't, I don't think we've been approached by any nonprofits, but it would fit our mission, I think, in large part.
Yeah, we worked with a nonprofit, or made a loan or an arrangement with a nonprofit. I'm not sure. Yeah, I think one of the beauties of our club is that we look at these various proposals that people come to, and we can just get to decide. I think I don't think there's anything in our bylaws or whatever that prevents us from working with a nonprofit. Is what I think. Our chair, Jerry, might come in and say something different, but that's my understanding.
When I spoke to Jerry, he said basically the same thing. One of the beauties of the club was being able to really take it a case by case basis, and that was something that at least he felt was important.
And it's fun.
Another question about investment clubs. Are there similar investment clubs that you know of on the New Hampshire side of the river at all?
I don't know specifically. I expect there are clubs that, and they may have a different focus. When I saw that question, I did a quick Google search, and I see that there's maybe a real estate group that may just focus on real estate type of investments. But if there isn't and you're interested, you can start your own.
I believe that there are some angel groups in different parts of New Hampshire. There used to be one in the Upper Valley. I don't know that it's been active on the New Hampshire side of late.
Great. Thank you. Any other topics, Maud, that are rising to the surface?
There was a question for Norman for the Norwich Solar Technologies, asking if we wanted to replicate the project in their own town. They were wondering whether it would be financially viable to take multiple small contributions and finance the project completely locally.
I think Brenda should be the one to give the more detailed answer. I can give a short answer. Is the tax rules require that there be, for these types of investments, a single owner. And so the only way you can pool a number of people together, my understanding, is to have an LLC structure which has sufficient income that you can get tax credits for the LLC's income. So if you're just starting and you have no income in your LLC, you can't get any tax credits for it. Brendan, you want to amplify on that?
Well, I guess the short answer is it depends. Obviously, the smaller that the projects are, it's much better if they're simple. And then the larger the projects are, the more that they can handle complexity. So a complex small project can be pretty tricky.
Great.
Right. There's one more that's kind of, they're similar questions, just directed towards both of the community loan funds. How many investors do you have, and are you looking to grow?
So I can begin. We have 657 investors, I think 513 individuals. And yes, we are looking to grow. In particular, we're looking to connect with investors who will help us to reduce our cost to capital. A lot of the needs that we see surfacing in the community, local farms, solar, and affordable housing are requiring us to lend at even lower rates. And so we're looking to raise 0 to 2% capital. And we're really pleased that already this year we've raised about 13 million, but we're constantly trying to raise capital in order to keep up with demand. Housing cooperatives so far this year, there are 4 that have been up for sale and are looking to purchase the park away from an investor. Private equity investors from Las Vegas are coming in and swooping in to buy these parks and jack up the prices.
Hmm.
And we're trying to empower the residents to secure their housing so it doesn't get bought out from underneath them. And this requires us to raise millions of local dollars. And with your help, we can do this.
That's a great, we're going to turn to maybe some of what we're thinking about doing in April, which is a sector-specific investment opportunities for situations just like you're talking about, John, where there, or on the renewable energy side, where there are very targeted opportunities so that we can kind of throw the net a little bit wider for those issues that might capture people with their passion. Before we move to that point where Jen and Nancy are going to share a little bit more, there was one question that came up from Harrison Drinkwater, and Jeremy Walla did jump in. It was regarding accredited or non-accredited investors and the meaning. Jeremy's answer is spot on. An accredited investor meets a certain net worth and income standard. Those are the qualifications I mentioned. Those qualifications were revised at the end of 2020. And there are now qualifying examinations that individuals that are not affiliated can study and sit for in order to become accredited. And I'm not going to say any more about it because I don't understand it fully, but I do know that Matt Kropp, who was one of the individuals who did the introductory presentation for the Vermont Community Foundation, in the course of that presentation, he talks about the possibility of putting together a study group for some of these qualifying examinations. So if Harrison or Jeremy, if either one of you are interested in more information about that, either get in touch with me or check into our resource page and look for the introductory presentation that Matt made, because he seemed like the guy to talk to, at least in my low-level business savviness. Great. So I think with the time, we're closing in on our 7 o'clock. There are still some good questions here. Contacts for all of our presenters will be included in our resource page. I want to thank all of you who presented tonight for doing this, and I'm going to turn it over to Jen, I believe, first to talk a little bit about what the next step is in this local investment journey that we've started tonight. So Jen?
Yeah, thank you. I just wanted to put a little plug in for our event with Michael Schumann. It's really about how do we expand our local investment ecosystem. So we'll explore that question and more during an online Local Investment 101 series with Michael. The series starts Thursday, March 4th from 5:30 to 7 and continues each Thursday in March. So the Local Investment 101 aims to help you answer 3 essential questions. How can I rebuild my community and the local economy after the ravages of COVID-19? How can I make my community more resilient to better prepare for future global crises? And how can I move my money into the businesses, projects, places, and people I know and love? We'll email you with more details about the event. And we really hope that you'll join us and that you're maybe already signed up.
Great. Thanks, Jen. So in addition to the Schumann workshop series, our kind of journey towards increasing local investment will offer more learning opportunities and networking. And we'd like to get some inspiration from the crowd as we develop sort of kind of our next steps. We already have some in the pipeline, an event called Local Investment in Home, which our colleague at Vital Communities, Mike Keese, is going to help put together. But we'd love to throw a poll at you and try to get kind of like some inspiration from you about what you would like to see next. So I wonder if Maud, you could launch that poll. If you could just kind of give us some ideas about what you found most interesting tonight and want to learn more about, or there's also a couple other ideas for you to kind of share your what piqued your interests.
It should be available. Let me know if it's not.
Does everybody have a poll? Great, thank you. Sorry, the hosts can't see the poll. We are blind. And we won't have to take too much time on this one. And the goal of this entire series is to provide knowledge and skills so we can move our money from Wall Street to Main Street. So we really appreciate your input on this because we really want to make content that is useful and is engaging and kind of calls to your passion beyond just everything local. But if there's something targeted, that would be great.
Yeah, there's a lot of capital and a lot of technical assistance support available that's tied to specific topical areas. So that's one of the reasons we want to do a deep dive on some of the issues of interest so that we can really match the support that's available for businesses operating in these topical areas to give them all the support that we can muster.
Great. And as people continue to fill out the poll, I'll just kind of do some closing follow up. So we will follow up tonight with an email to everybody that registered and joined. Thank you. Links with the resources that were mentioned tonight, the recording for this event, the chat, answers to any unanswered questions that came up in the chat. If you didn't get to it, we will hunt down the answer and put that into the email. Also, Vital Communities does have a local investment resource page that we've added to our website. I think, Maud, can you put that in the chat maybe?
Yes, absolutely.
Perfect. And we're building it, so we'll be adding, it's got a wide variety of information and inspiration and resources, and we'll be adding to it over this kind of journey. And then just some final kind of rounding us out. You know, the last year has been just really terrible in so many ways, but the pandemic has also brought a lot of opportunities. You know, and a thriving relocalized economy will prepare us for the next emergency. So it's a perfect moment to shift our capital to where we live, to fuel the entrepreneurs and businesses and projects of our communities that will help us build a more sustainable and vibrant and resilient Upper Valley. So I'm so glad you all were able to join us tonight, and I'm very appreciative of our presenters also. And Erica, thank you for being the ace facilitator, and Maud handling the chat, and everyone else who helped to make this success. Really appreciate everyone's time, and I hope everyone has a wonderful evening.
Great. So before we go, I'll give you the top 3. Local renewable energy, working lands, farms, and food businesses, and community loan funds.
Woohoo!
So stay tuned.
Great. Thanks, everybody.
Have a great night, everyone.
Have a great night.